I'm going to show you how I'd start day trading from a blank canvas. Most beginners, when they dive in, blow their first account and waste months chasing the wrong things. I have to say, I did that too, but if I could start over today knowing everything I know, I would skip the trial and error. By the end of this, you will have the complete guide on how to master day trading in 2025, without wasting time, money, or blowing up your entire capital. Let's jump into it. So, the first secret I wanna share with you that helped me a lot in my trading career is focus on the process, not money. At first, we all start day trading for money, right? You have to consider that you will have losing days, losing weeks, maybe even losing months. You have to understand that money is just a byproduct of doing things right and consistently. If you're staring your P&L all day, chasing green days, and panicking over the red ones, sorry to say it to you, but you're an emotional trader. But when you focus on mastering your process, your routine, your setups, and your execution, the money will follow. The second part that played a part in my trading success is sticking to one strategy until you master it. Now you might be thinking, yeah, I've heard this before, it seems obvious, and blah blah. But here's the harsh truth. Most beginner traders never do it. When most people start trading, they get excited and try a bunch of different strategies. Maybe they jump from scalping to swing trading, then to some indicator-based system. When they hit a few losses, which is inevitable to trade, they immediately blame the strategy. They think this just doesn't work for me, and they jump to the next shiny method they found online, of course. If you stick to one strategy, over time, you will become more familiar with it. You realize when this thing does work and when it doesn't. This process where you really master one approach builds confidence. And confidence is huge in trading, if you ask me. When you believe in your strategy, you stop second guessing yourself. You trade with conviction, and that often means better results. When you keep hopping to one another strategy, every time you hit a losing streak, you never really give yourself that chance to really learn. You are constantly resetting your progress back to zero. And let's be real, every strategy has its losing streaks. Even the best traders in the world lose money. They actually seen play over hundreds of trades. This confidence only happens from repetition, not from strategy hopping. If I had to give you a concrete rule, it's this. Stick to one strategy before judging whether this thing works or not. That alone might sound a lot. And it is, but it's necessary if you want to develop a real edge in the markets. Use a time to journal. Write down what worked, what didn't, and how you felt. Review your trades weekly. This isn't about memorizing a set of rules. Instead, it's about understanding the why behind your strategy success and failures. Once you reach that point, you can either continue refining your edge or considering adding new rules. But only if you've built a solid foundation. So, don't get caught in the endless cycle of switching strategy after strategy. Remember, mastery beats variety. The third secret you wanna consider is journaling your trades. When you do something and you don't log it, what ends up happening? You stay still without realizing it. The same is true with trading. If you don't write out your trades, you will miss out on the most important feedback that will make you a better trader. Journaling helps you reflect. It will help you spot patterns in your behavior, like emotional mistakes or repeating errors in execution that you wouldn't notice otherwise. For example, maybe you see that you tend to exit winners too early because you are scared, or realize that you are jumping between trades without waiting for a confirmation. Without a journal, these habits stay hidden and cost you money over time. Your journal becomes your trading coach. Reviewing it regularly is how you turn random winners into consistent growth. If you take trading seriously, dedicate time every day or week, and review your trades. In short, journaling is the bridge between you and where you wanna be in trading. Fourth thing that you must not overlook is risk management. Risk management is one of the most overlooked yet absolutely crucial parts in trading. It's often more important than the trading strategy itself, and it's really fucking easy. If you don't protect your capital, you won't be around long enough to make consistent profits. Think of your trading account like a business. If you keep throwing money on reckless trades, your business won't survive. So, the first rule of trading is never risk more than you can afford in a single trade. A common rule I follow is to risk no more than 1 to 2% of my total trading capital for all of my trades. This means that if you have $10,000, you are risking $100 to $200 maximum per trade. This small risk ensures that if you hit several losses in a row, you don't wipe out your entire account. Another key part of risk management is using stop losses. A stop loss is a preset level where you automatically exit the trade to prevent bigger drawdowns. But here's the catch. Your stop loss needs to make sense with the market structure and your strategy. Setting it too tight will get you constantly stopped out. Too wide and you make less profit. Good risk management isn't about avoiding losses. It's about controlling them so you can trade another day. Your goal as a trader is to survive long enough to let your edge work for you. That means keeping your losses small and your winners bigger. Fifth secret I wish I knew back then is mastering my emotions. My first trades were all based from greed and fear of missing out. No strategy at all. Pure gambling, right? Once I picked my strategy and began trading normally, I wanted the price to retest my entry before I closed for loss. I entered trades a friend gave me with another strategy and I wanted to make as much money as possible. Did I have one day that I didn't hit my goal? Then I would change my entire strategy. You have to understand that trading is not about charts and numbers. It's about mastering your own mind. Emotions like fear, greed, and impatience can destroy even the best trading plans. For example, fear can make you exit a trade too early, which means missing out on bigger profits. Greed can push you to take reckless trades or hold onto losing trades, hoping they will turn into successful ones. The key to success in trading is to control these emotions. One way to build emotional discipline is to trust your strategy and stick to rules no matter what. When you follow a plan, your decisions become less emotional and more objective. Another powerful tool is mindfulness. Being aware of how you feel during a trade and recognizing when emotions start to take over. If you notice yourself getting anxious or impulsive, please take a break. Also, understand that losses are a part of the game. Building emotional discipline is a process, but it's what separates a professional trader from beginners who get stuck in emotional cycles. Trading is not a get-rich-quick scheme. If that's your goal, you are already setting up yourself for failure. When most beginners traders start, they think they will flip $500 into $50K in a few months. And look, that's a dream, right? The reality is very different. Real traders focus on growth and not gambling. What helped me the most was setting small, realistic goals, things I could actually control. Instead of saying, I wanna make 10,000 this month. Instead, I started saying, I wanna follow my plan perfectly for the next 30 trades. I want to journal every trade this week. I wanna cut losses quickly and stick to my risk rules. These goals are process-based and not result-based. And that's key because you can't control the outcome of a single trade. But you know what you can control? Your behavior. And then there's patience, a skill that almost no beginner has, but every pro trader must develop. You might go weeks or months feeling like you are not making any progress at all. The market is slow or you are just not seeing your setup. But that's also where 90% of traders will quit. They will lose patience, chase random setups, force trades, and end up blowing their account. They understand that trading is a long game. It's not about making a quick buck. It's about building skill, building discipline, and letting your edge play out over time. So instead of trying to rush the process, just respect it. Be okay with small growth. Be okay with having days that you don't win. Be okay with having days you don't trade at all. Because in the long run, consistency beats intensity. Your only real competition is the trader you were yesterday. Let's be honest. You can watch every video on YouTube, read every book, and follow all the gurus online. But if you are not putting in the reps on the charts, none of it matters. And just like playing piano, learning a sport, or speaking a new language, the only way you get better is through consistent and intentional practice. You need to be in the charts every single day, even if you are not trading at all. You should be analyzing price action, watching how your strategy plays out, and reviewing how the market moves. Now, don't confuse being busy with making progress. Scrolling TradingView or Twitter for 6 hours doesn't mean you are improving. What moves the needle is structured practice. Things like backtesting your strategy on past data, making up charts and spotting your setup, practicing entries and exits with bar replay mode, or reviewing your winning and losing trades. Which brings me to the second half of this, reviewing your process. 99 of the traders skip. They just go from one trade to the next without ever asking, why did this trade work? What could I have done better? Am I improving over time? When you review your trades, weekly or even daily, you start to notice patterns. You look at what you are doing wrong, you'll also see what you are doing right, which builds confidence. Think of this as your trading feedback loop. Practice, review, adjust, and repeat. That cycle is what sharpens your edge over time. The truth is, most traders don't fail because their strategy is bad. They fail because they never stick with the process long enough to improve. So, if you want to separate yourself from the crowd, show up, not once a week. Every single day. Learn from your mistakes and treat this like the profession it is. Not a side hustle and not a lottery ticket. You won't see results overnight, but you'll see results over the long term. Because progress in trading isn't loud. It's slow and quiet. When I first started, I tried to do everything on my own. I thought I would just figure it out by grinding and watching videos. And sure, I did learn things that way, but it was slow as hell, painfully slow, and expensive. What changed the game for me was surrounding myself with other traders, joining a community, asking questions, and sharing my own setups. Just having people who are on the same journey. You don't need to copy people's trades like I did in the beginning. The point is to get perspective and see how other successful traders think, how they approach risk, how they stay disciplined, and how they manage their emotions. Even better, if you can, find a mentor, someone who's already been where you're trying to go. A mentor can save you years of mistakes. They've already blown the accounts. They've made the emotional mistakes. And they can help you look at the process by telling you what matters. That's exactly why I built NeoFlow. It's a community I wish I had when I started. Inside, you'll find traders just like you that are getting better every single day. We do weekly reviews, live sessions, and I personally share my setups and mistakes. Whether you are brand new or looking to level up your trading, NeoFlow gives you the environment and guidance to grow faster without wasting years figuring it out alone. If you are serious becoming a profitable trader, check out the first link in the description and join us. So yeah, surround yourself with the right people. Trading is a solo game, but it doesn't have to be. Now listen, if you made it this far into the video, you're already ahead 99% of people. Most won't even finish a 10-minute video. So keep that momentum, keep showing up, because the truth is, success in trading doesn't go to the smartest, it goes to the most consistent. You now have the plan. The next step is to take action. Start now, and in a year from today, you will thank yourself for not waiting. So that's exactly how I would let trading fast if I had to start over again. Not by chasing signals, not by switching strategies every week, but by mastering the process, controlling risk, and staying consistent day after day. And if there is one thing I want you to take away from this video, is this: success in trading, it's about doing the right things over and over again. So start slow, be intentional, put in the work, and never be afraid to fail. If you are serious about leveling up and want to surround yourself with traders who are just as committed as you, check out the first link in the description below. If you like this video, click the like and subscribe button. Thanks for watching, see you in the next one.